Good morning. Monday, July 3rd, first day of trading in July. Fun times. We're going to run this. I was looking at SPY. First off, I want to clear something up. Somebody asked, I think it may have been Highway or someone asked me in the Facebook group, what do scans mean? So at the end of every newsletter, I put scans in. And it lists a bunch of symbols. What does that mean? That essentially means when I go over here to Market Scanner and I go to my 4-hour algorithm and I scan what's in the 4-hour algorithm, like for instance, let's take one, Morgan Stanley. I think that one just came up. When I come over here and I go to Market Scanner, and by the way, anyone who upgraded to Trendspider over the weekend, there were a lot of you. I sent out that welcome a lot. But the scans mean, look, 85.76 for Morgan Stanley. So in today's newsletter, you will see a scan of Morgan Stanley, $MS. That's what scans mean. It means you've gotten an entry point into the algorithm. Now, a scan that I know we had before, let's see, Netflix. I think Netflix is one that we had before. No, it got you out and then it got you back in. Let's take a look at something like maybe CrowdStrike is one that was in there before. CrowdStrike is one we got to scan in. Maybe Qualcomm. Let's see. I mean, all of these are brand new entries. That's a new entry. Let's look at Goldman Sachs. Goldman Sachs, I think, is a new entry. Yeah, you got the button hook and then it crossed up and boom, you're getting that one. Let's look at Broadcom, AVGO. See if this one, because some of the chips... no, got you out and got you back in. Sometimes you'll see a scan. And if you're in Trendspider, you won't necessarily see it like with an entry point there, even though it's in the scans list. So if you got Trendspider and you get my newsletter, which is free, you can basically just go in and look, run the algorithm, and you'll see the entry point for that symbol. So again, my newsletter is free. You sign up for a Trendspider subscription, which, by the way, is 50% off up until tomorrow. $32.50 a month, $390 a year. If you're not going to make $400 in trades, in gains, say for instance you made $1,000 last year in actual trades, it's not worth. Trendspider's not worth it. $400, 50% of your actual trades is not worth it. Say you made something like $20,000 in trades. $400, the Trendspider will save you $400 just with this algorithm. So getting you in and out, that's what scans mean. Now, do you need Trendspider to do this? No. Your charting software should be able to tell you. It just may not have this easy exit and entry and exit. I mean, look at this one, for instance, Broadcom, 629. If you had noticed this one before, the button hook, you could have gotten out. Now, the algorithm kind of doesn't wait for you to get out, but it got you out about 840, gets you back in at 867. You could have just held it. This was close enough to confirmation above that 9-day that you could have just held it. So that's what scans means in the newsletter. It is the symbols. I promise you guys every day in the newsletter, you would actually get some stock tips. Those are your stock tips. I just include some commentary about some other stocks that I like. But if you want the newsletter, it's right here, dailystockpick.substack.com. You can see there was a paid one this weekend, and you can sign up $7 a month, less than you pay for a Happy Meal. I think it's about what you pay for a Happy Meal. But indicators I use right there. So this explained, it was long. My apologies for the length, but I'd rather overwhelm the paid subscribers than underwhelm you. And so this is the story of how I came up with the algorithm. And essentially, you'll see this chart right here. Now, this chart kind of plays twofold in today, but this chart right here, it shows you the 2008 housing crisis, which I took a bath on. I did not have Trendspider. Trendspider did not exist back then. And then the COVID crash, which I took a bath on as well. That is basically right there. Those are the two things that I said, okay, I want a charting program that will help me backtest so that if one of these crashes, 57%, 36% happens, I want the ability for a charting program to backtest a strategy that might avoid that type of thing so that when we get these types of downturns, I can quickly make some adjustments in my portfolio so that I'm not completely hurt by being 95 or 98% invested in the market. So that's essentially what it does. If you want to sign up for the newsletter, if you want to sign up for Trendspider, Linktree /daily stock pick, linktr-ee/daily stock pick. The Trendspider sale is right here. You'll get my algorithm. You'll get the watch list. You'll get the scanners, visible service if you want to sign up for that. If you don't have a brokerage or if you're in Robinhood, I would suggest Webull. You can get 12 free stocks valued up to $3,000. The third link right here. Any of the other social platforms that you have Facebook, you have Twitter, Instagram, YouTube, Twitch, Spotify, Apple Podcasts. You can tip me. You can gift me if you make money. You can even email me, whatever you want. It's all right here on the Linktree. Just go there. It has all of the links that you need. But yeah, that paid newsletter, that was a long one. Now, what I don't charge you for are the free ones. Typically, what I'm trying to do is the free ones are more about stocks. The paid ones are more about education. My preference is that you get educated about this stuff. But if you don't want to be necessarily need the education, I'm not going to charge you for the stock picks because you know what? At times I may be wrong. But what I posted yesterday as a newsletter, and it comes free in your inbox, is the way I see the market. And the way I see the market, again, you can look at this chart. This is the COVID pullback, and that's the COVID pullback. That's the housing crisis pullback. What do I see in this long-term chart? Each candle's a monthly. This is a monthly chart of SPY. What do I see in the candles? I see that the MACD is just about to cross up. If you paid for my newsletter, you will absolutely understand the MACD cross up because I included a lot of commentary and how I've discovered the MACD. You will also see that the RSI is in no man's land, but it's going up. It's not oversold yet. So what did I say I see the market? I see it going up. I just see it continuing. So when we go back here to Trendspider to actually look, I'm sorry, I need SPY. I'm gonna pull up QQQ because QQQ, it's the first monthly MACD cross up on QQQ since May 2020. If you remember May 2020, and let's go back to May 2020. Let's do a monthly, and you can see that MACD right there of QQQ? First monthly cross up since May 2020. Where were you in May 2020? You were just getting out of COVID. If you had invested just in SPY at $200 in May 2020, it opened at $184. It closed at $218. Your average is about $200. So say you got it right in the middle at $200. You've almost doubled your money since May 2020 just in SPY. That is just the S&P 500. QQQ. You've doubled your money because you're almost at 400. And it's the first MACD cross-up. Over the last 20 years, when a MACD cross-up has occurred, the following month was green 71% of the time with an average return rate of 2.47. That's not to say that we're absolutely going up. 7 out of 10 times, good bet. How would I play this one? Well, today I may be buying TQQQ. And that would be a way to kind of hold it for a month. If you had bought TQQQ in the algorithm a couple months ago, you're still in this. 2764. You just had so it hasn't gotten you out the algorithm. You got all kinds of gaps below it, but your TQQQ is just showing a cross up here on the 4 hour. So if you buy it here, I would say try and buy it under 40. In pre-market, you're up 0.22. The market is only open till 1. You're going to see some volatility here in the morning. Not much. I would expect the volume to be down. That MACD cross up on TQQQ is the way I would play it. So again, newsletter, Trendspider subscription. I do think that this one, both of those are good ways to make money if you listen to my podcast. And again, the links are down below. The links are on the link tree. If you want, get the elite service. The way signing up for Trendspider works is you sign up, you pay for the yearly or you pay for the monthly, one or the other. Then just email me. Go to the link tree and email me from the email account that you signed up with. Or if you want to email me from a different account, just make sure that you tell me the email address that you signed up. I then go into Trendspider software and figure out that you're on my program. If you're not, I get you moved over. Then I'll send you the welcome letter that includes all the goodies. It includes the algorithms. It includes the watch list. It includes the scanner. So a lot of people signed up for it. There's a lot of work being done over the weekend for you guys kind of setting up your systems. On my YouTube channel, if you go to my YouTube channel, I include this in the welcome letter as well. You'll see a getting started with myself and David Yoakum from Trendspider. I send you to that link as well. Now, here's the SPY. Here's the S&P 500 heat map from Friday. It will explain when you get the newsletter today. There are so many cross-ups and so many scans in the, based on just what I just did, that I'm not going to go over everything. When you have this much green, this much upside, it's going to get a lot of main stocks that are in buy territory. If you have a crazy, feeling about one stock and it's in the cross up, use your charting program. I don't want to send you to Trendspider because you can use a charting program as well. Learn your candlesticks. Learn all of that stuff. That is crazy. That's the basis of Trendspider. Somebody asked me, hey, if I get your algorithm and stuff like that, is it just plug and play? No, you still have to do work. There is nothing in the stock market that is plug and play. If you want a texting service that tells you to buy TQQQ at $27.64 here based on an algorithm, and you're going to pay $10 a month for it, that's great. It's not me. I want you to learn about this stuff. I want you to identify, even without a charting, even without Trendspider, that, hey, at $27.64, this may look like a good buy. You know why? Because the MACD is down here at the oscillator point. The last time it went to the oscillator point, it was at 22. And it went up from there. Ooh, it's back down here. The RSI is at 55 in no man's land, and it's going up. I think it's probably a good buy. Right here, maybe, I should sell out because the button hook's happening. Well, I got out. You know what? I got to get back in because I have confirmation over the 9-day. So, again, my system works for me. Your system needs to work for you. If my system can help you, then sign up for Trendspider. It's as simple as that. But again, the MACD on QQQ crossed up. I would play it with TQQQ. I would try and get this one under 40. I think at some point this week, you will be able to buy TQQQ under 40. And I think we at least go to 44. In the month of July. Doesn't mean you won't see a pullback. Remember, sizing matters. Get into positions so that you're sized correctly. Say you want to put $100 into TQQQ. Don't go $100. Go 20. Go 20 under 40. And then when it pulls back to 38, go 20 more. And when it pulls back to 37, go 20 more. Until you get to your 100. When you get to your 100, if you're way down or if you start bouncing back up, that's when you start selling. That's when you start trimming. And you can always buy back in. You can buy back in the whole way down. Sell your 20 for a loss, buy back in at 20, go to a different ETF, a different levered ETF. Again, I have all of the triple levered ETFs in a watch list for you if you sign up. But let's go to your boy's biggest play, Apple, AAPL. It closed above 3 trillion. First company to ever hit the 3 trillion mark. At some point, you're hitting all-time highs. So over the weekend, there were all kinds of Apple stories. The biggest thing today is that suppliers are being asked to hold back parts and not make as many parts for the Apple Vision. At some point in time, the AAPD, this is the short of Apple. AAPD makes sense to get into. Now, you're going to wait for confirmation. Kind of like Lane brings up, Highway asked, what's confirmation? Confirmation is different for everybody, but confirmation for me in my system is the 9-day. I don't hold tight and fast by rules. What I like to see is the candlestick above the 9-day. If it touches the 9-day on the bottom side, I'm slightly concerned. If it breaks through the 9-day on the bottom side, I'm a little more concerned. If the upside doesn't even touch the 9-day, I'm not getting into that stock. Well, what do we have here? Look, the green line is the 9-day. I ain't getting into AAPD right now. I'm not trying to time the bottom. I'd rather miss the first 5% and get the second 10% than get in too early. Look at all of these losses. Again, the algorithm doesn't do you any favors from the recent standpoint, but I tell you, over 2 years, the algorithm absolutely does you well. We're on the 4 hour, over 10.8 months, because that's how long AAPD has been around. It hasn't been around 2 years. If you bought this when it opened up 10 months ago, you lost 20%. If you use my algorithm, again, you lose, but you lose 16%. The algorithm can't make you money on a losing stock, but the algorithm can limit your losses. Again, pay for my newsletter, and it's all explained in there as to why I developed the algorithm. That was what this weekend was about. But again, Apple, Dan Ives says that Apple, it's inevitable. They're going to come out with a car. I'm gonna in the newsletter, I will link to this article that says Apple, the car is a matter of time, just when, not if. And Dan Ives puts it out there. He says, yeah, and I'll put it out there for you. Apple, on the other hand, look, it's got confirmation. It's over that 9-day. Do not buy AAPD right now. At some point in time, this makes sense. Apple is a $200 stock. With momentum, this one gets to 200. Now, my guess is 200, whenever you get to a new handle, 190, 200, Apple typically, does a little dancing around those kind of even numbers there. I would expect it to dance a little bit around 200 and then maybe pull back to the 186 realm. You're not getting a lot of volume up here. Again, you're in summer. It's a little bit hard to gauge it, but you're not getting there. I was listening to a podcast and actually read an article that the podcast was talking about 4 AI plays that they feel are the best ones. First one's NVIDIA. You can see this support line right here that I drew at 369. Right now, the algorithm has you out. You got a nice 51% gain. Your boy bought here, I think at 290. 299, 298, somewhere in that neighborhood, right before earnings. I'm sitting on that. This is a long-term hold. I am not trading this one. When it goes below 400, and at some point in time, my belief is it will go below 400. It's capitulating right here between the 405 and 420 mark. Right now, you're at 422. I would say it with me, as it not coming down to 400 again, I may buy some at 405. I thought it was going to play between 370 and 400. It doesn't seem to be. And the longer we sit up here, the more I want to get in, but I've got to be patient. I bought a small amount 2 or 3 lots down here. So I've still got like 4 or 5 lots to go to add to my position that I want to hold long-term in NVIDIA. The next AI play that they said was Microsoft. Microsoft, for me, I think anything under 330, if you can get this in the 330 handle, like for instance, it's 339 right now. If you don't have a position in Microsoft, I don't think it's a horrible place to start adding to your position. Buy it on the way down. When you first buy it, make that a 5-day rule. You will not buy it above that price that you first buy it at for the next 5 days. Even if it starts soaring, Microsoft, it just got you in with a 340.39. I think anything under 340 is fine. I'd rather see you under 330. I do think at some point in time we touch this gap right here between 318 and 315. These lower gaps below 300, I just consider them, you ain't getting down there. You're just not getting down there. The AI train is just too strong. The next AI company is Google, and that's 3 out of the 4, NVIDIA, Microsoft, Google. Google, 120.92. I said anything under 120, absolutely buy it. Your boy bought under 100, a bunch under 100. I'm sitting on it. It's long term. I've got this one in a retirement account. I've got 6 figures in this one. All the way from like 50, all the way up, maybe even 20. I mean, it's a long-term hold for me. Google, again, I kind of made the choice. I chose Apple over Google when I picked the iPhone over Android, and which was a good call, but I still had Google. So I think Google, anything under 120 in pre-market or at 120.64, I'd wait for it to get to that 119, then just start adding it. And the final of the 4 is Amazon. I think anything under 130, you're doing fine. I think at some point in time, you may get back down here to this shelf at 116, 120, but that volume shelf between 125 and 127 is actually expanding. With this one coming out, I just see these volume shelves up here expanding. So I think adding around those prices is probably a good guide for you. Tom from Instagram, he wrote to me actually last week. I just forgot to add it. My apologies, Tom. He's a new listener. Been looking at Easterly Government Properties, DEA, and just seeing what your thoughts are. 7.29% dividend. Many thanks. He's from Liverpool. I could not, by the way, I can't believe how many international listeners I have. I can barely understand myself in English, and if English is your second language, kudos to you for understanding me. So DEA, ironically, 1466, it has a buy. It's already below that at 1450. You're hovering right around this 200-day. I don't see anything explicitly here in the 4-hour that I would say don't buy it at 1466, although it's a little bit expensive. Come back here to March and you were at 12. You just passed your ex-dividend date. You've got your earnings coming up August 1st. Your MACD's kind of just hovering around. I would say 1466 is probably average. If I go to a weekly, you're seeing that death cross right here in May. It's just taking a turn. And your 50 days moving down, your 200 days moving down. So long-term and medium-term, not a trade. Not a trade whatsoever. I would say stay out of that 1466, even with this one. You're not seeing it well above the 9-day. And the 9-day hasn't crossed the 21. So even your short-term isn't super bullish. You are seeing the Bollinger Band cinch up a little bit. When those two cinch up, typically that means it's either going up or down in a good pattern. You can see this one cinched up right here, went up before absolutely just losing it. But I don't know enough about the fundamentals of this one. Like you said, 7.31. 7.31's a big dividend to hold. It's a that's a big dividend for a $1.3 billion company. It is a small REIT, probably investing in government properties. So long term, they probably have enough. March 28th, upgrade Compass Point, price target 17. I would be careful about this average price target of 15 because it all seems like it was last year. And it seems like they may have been overpriced specifically since this year. I mean, here's January 2022. There's January 2023. January 2023, you started out at 1471. You're at 1450. You went all the way down to, it looks like, $12.27. I don't want to talk you out of this one, but I mean, come on, Tom. AI. Is this one into AI? I don't know. I mean, I don't think they have AI. I'd probably move you more towards a growth one. Like I said, when you look at QQQ, we're still in a bull market. So I'd probably point you towards that one. This one probably not horrible. I think there's probably better REITs out there. But since it's a government, I would say that it is long-term. Based in Washington, D.C., focuses on the acquisition, development, and management of Class A commercial properties that are leased to the U.S. government. I think it's a safe play, but 52-week range, $12.27 to $20. You're 18% below your high. 18% above your high. You're 27% below your high. Well, I think I got that backwards, but it's a freaking Monday. Give me a break. So, Tom, I'd probably point you towards something different. I don't think it's a bad one, though. If you want to hold on to that dividend, I think REITs are just kind of in trouble a little bit. And I think it depends on who you put in the government. I mean, if Trump gets in there, expect that government to shrink down to almost nothing. If they win, if Trump gets in and the Republicans get the House and the Senate, which I hope doesn't happen, but I would expect a pretty good trimming of the government size. That's what I would do. I am going to include in the newsletter, it's a trading plan sequence. And you can mix these around, but absolutely 8 things you should do when you trade. It's trade or invest. Whenever you buy, whenever you sell, find an entry signal, set a profit target. So you set your upside, determine risk reward ratio. I want to make 10%. So the most I really want to lose is 5% on a trade. Now, investment, I can go down significantly. I don't mind holding on as long as the company's a good company with good management, good products, and good earnings. I don't mind holding on. Quantify the price action risk. Set your position size. Set your stop loss. Set your trailing stop loss. Respect first exit signal, win or lose. That's big. I mean, that's big. I'll put that in there. You should probably laminate that card, put it on your dresser, do whatever you need to do. Ooh, look at this. Yeah. A hello on YouTube from Kenya. Shout out, man. I can't read your name, though. Listen, I'd have to translate that one, but I can't read it. A good way to play oil, and I want to shout out Jim Lebenthal on CNBC for this one. But you can kind of see the algorithm was telling you to buy here in the 6s, the low 6s. It got you out a couple of times. I probably would have told you to hold on because I do think that this one's coming up. I think you've got a $10 play here. And this is RIG, R-I-G. It's a company based in Switzerland. They basically transport oil. That's what they do. Look at the weekly. You're still above that 50-day. Your 50 days moving positive. Your 200 days just starting to move. You're kind of creating this volume shelf up here between 6 and 7. I would get in the 6s. I would look at your chart, make sure that you're comfortable with your entry point. Make sure you identify your downside and your upside. But you can't argue. $6.39 back on Friday. That would have been the buy, RIG. In fact, I need to put this into, I think the energy names is where I'm going to put this into. Yeah, I'm going to update that one. And yes, it's a shared list because I share it with a bunch of people. So RIG is a good one. Now, let's talk about the news of the day and the news of the weekend for at least my multiple text groups that I'm in. It's Tesla. Tesla deliveries higher than expected. About 4% above the consensus. Just over 466,000 for the quarter. That's for the quarter. Hugely strong. All eyes now turn to the auto gross margin. So essentially, remember, Elon basically said, I am going to lower the price of these cars and take less margin, whereas he was making over 20% margin, whereas Ford and GM make like 4 to 8% margin. Elon was making over 20%. It kind of got dinged when it went down to 19%. It got below that 20. And that's where you see after this earnings of the last time where it was trading at 183 and it went down to 163, that's where the margins came in. So The earnings are coming up July 19th. 2 weeks. You've got 2 weeks to try and determine, do margins actually make a difference in this? This one has run from 163 here in May to 261. It's trading in pre-market at 276. Absolutely has all the confirmation in the world. You got a gap down here at 230. This was the gap. It started to fill it. I didn't want to buy in. I missed out again. If we go over to a short wait thing on the, I can't wait for a pullback. This is how the market seemed to me. I can't wait for a pullback. And then once this right side, I never have a problem because I have Trendspider and I can know when to get in. But the left side, can't wait for a pullback. That's where I've been with Tesla. I've been waiting for this pullback. It got out way too early. I got out here, I think, at about 183. And I got out way too early. Once it filled this gap, I got nervous. I didn't expect this. So that's where you can kind of miss it. But remember what Elon's doing. He's setting this up so that when he gets full self-driving, he can sell it for $20,000 to $30,000 to a couple of million cars out there on the road. Personally, I don't think he gets there. I don't think so. That's my own personal opinion. Full self-driving, I have it on my Tesla. It is unbelievably good on the highways, unbelievably bad for the cities. I just don't trust it. I think it's way more stressful to actually drive on auto drive in the city than it is to just drive it yourself. So that's my take on it, but fanboys may disagree. I am a fan of the stock. Here's what I see on the stock on this 4-hour. I'm seeing the cross down of the MACD. That didn't get you out in my algorithm because there's a couple of other different things, but it didn't get you out, but it pulled it back down here. And you're going to get another cross up of the MACD. The RSI's at 60, a little bit overbought, but you got 2 weeks here. I just don't know where this one goes. With the expected lower volume of the summer, I just don't know. Now, if you were playing last week, I got out of TSLQ at about 34.80, 35, close to 35. We're at $30.50. This $33 buy right here, I timed it up here. And listen, I was expecting this gap to get filled. Didn't get filled. It touched it. It rejected it. I said, okay, I've got to look at getting out of this one. I got out. You're at $30.61. Had I kept in here at 33, I would have been, losing about 10% right now. Wouldn't have felt good. Feels good to get out here. But again, you have to be careful when you short Tesla. The one that was the right call and the one that I should have bought right back into was what TSLA, which is 1.5 times shares of Tesla. And this one, you have this gap down here at 15, didn't quite hit it. Went down to about 15.25. But if you got in there at 15.25 and you're sitting there at 17.35 right now, in pre-market, you're at 18.79. Kudos. And you're just getting a MACD cross up. I talked about it earlier, trying to find one. Here you go. Here's a perfect one. 8.80. This one gets you in at $8.80 May 1st. You're at 17.35. You've doubled your money. More than doubled your money in TSLA. And then you pull back and you didn't get out. If you got out because you lost your confirmation at 17, you had a chance to buy back in at 15. Take your profits, buy back in when it gives you confirmation. Say you sold up here at 17.49 and then you buy back in at 17.57. But this is what I'm talking about. This is going to cross up again on the MACD. Right here, you're seeing the MACD cross up. This entry, it's a secondary cross up. So in my algorithm with the secondary cross up, you're not going to see another buy signal here, but it's another bullish signal upward. So I'm not telling you to buy TSLA. I'm not telling you to buy TSLQ. I'm just saying momentum matters. So other stocks that are up, NIO is up 4% in pre-market just off the strength of Tesla, and Li Auto Those are the two. This one's up 5.25%, both Chinese EV makers. So let me bring up, I was asked to go over crypto in the private Facebook group. I won't be going over crypto. There's 5 stocks that I think in crypto that I recommend. I am not an expert in crypto. You may think that your boy knows everything. Your boy knows nothing about crypto. I know Coinbase has been a monster stock, trades right along with crypto, probably not as crazy as crypto. 53.29. I said, get this when it was an overreaction. This was when the Wells notice went out from the SEC. And Coinbase said, F you, SEC, you don't know what you're talking about. Had confirmation all the way up to 71. In pre-market year is 72.44. Riot is another one that I don't go over a lot, but this one and Mara trade right alongside with each other. You had a buy in here at 1064. You're at 1181. And it has confirmation. So Riot is one. Mara has been a monster. 1021. It never got under that $10 mark. Back here on July 15th, if you bought it at 981 and you have the cojones to stay in this one, kudos to you, because you're at 1385 right now. A 40% gain, somewhere in that neighborhood. But if you really want to trade some Bitcoin and Ethereum, trade GBTC. Do not hold GBTC. This one does not trade in line with Bitcoin. My algorithm is pretty smart about it. My algorithm actually over 24 months, 2 years, you make 30% in this GBTC. You lose 30% if you just bought and held. So it protects you from the downside, my algorithm. It's kind of getting that button hook that I always talk about. See it back here in April. That's a button hook. You're seeing it start to form this. This was an enormous candle, by the way. An enormous candle that broke through the 9-day. But you're holding confirmation. But you're seeing that MACD start to cross down. You're seeing the RSI start to move down. In pre-market, this is up 1.3%. It is at 1944. The Ethereum Grayscale Trust, same thing. You can trade this one. $7.95 just a few days ago. You're at $9.94 right now. And again, you had a huge candle and you've got confirmation above the 9-day. You covered this gap. So I would say trade those. I'm just not a very good crypto guy. I mean, I'm a boomer, man. I don't own crypto. I probably should. Everybody says you should put 5% of your actual net worth into crypto just because it could be life-changing. I am a guy who will drive 50 miles to avoid an ATM fee. So I don't like the fees that crypto has to go along with it. Just me. My weekly stock pick, the dude has turned it around. He's up 5% year to date. Remember, the Dow, let's go to Seeking Alpha. Let's look at the Dow. Let's look at Dow Jones Industrial, DJI. Here we go. Let's see charting, and let's see year to date. Year to date, 3.84. My weekly stock pick's up 5%. You know what he picked this week? Apple. He picked Apple again. He's up. You have confirmation in Apple. I think his algorithm works. Again, my weekly stock, it's called myweeklystock.substack.com. His newsletter is absolutely free. There's his tracking this week. Go and sign up for it. myweeklystock.substack.com. Apple is his pick this week. I got a big, I got a lot of Apple. Here's the heat map. I want to go over this because the list of scans are huge. And I'm not going to go through all of them. I'm going to give you the core portfolio. XLY is in our core portfolio. This one, secondary cross-up. XLK is not in our core portfolio, but secondary cross-up has another one. IGM, which is an expanded tech ETF. This one is just a tech ETF, 393.57. It's trading at 392. It had that buy-in. This one has run up so much, but what you're seeing is that MACD is crossing up down here. So it has the legs for another one. There's a triple levered tech ETF that I want to go over, TECL. This one, I want you to see something. TECL. It has an initial cross up at 54.09. The MACD is down here. The RSI is at 66. It's a little bit overbought. If you want a triple levered technology shares, I think that's one you could probably get into. I got a whole bunch of covered call ETFs that has entries, like SPYI. You guys know I bought SPYI last week for my HSA account. I bought it somewhere in the neighborhood of $49.30, somewhere around there. It's up at $49.64. You're up slightly. This is not one where you buy to trade it. This is one where you buy for the dividend. We talked about the government housing one with a 7% dividend. SPYI pays out monthly, and it's a 12% dividend. Year to date, this is up 7.81% because the SPY is up, but SPYI is one that comes up. You got a whole bunch of spider sectors, a whole bunch of low-cost Vanguard ETFs, including VOO, which is in our core portfolio as well. This is a secondary cross-up here. Again, you had the MACD going down. It's coming back up again. So February is a good month. Overall, let's look at the February. Let's pull this back to 2010 with VOO. 13 years. July's up 83% of the time. 83% of the time it's up. So, again, Trendspider is great. Let's talk about the sponsor of the podcast, Trendspider, obviously 50% off. The sale is over in 1 day, 15 hours, 51 minutes, and 23 seconds. You need the elite level of service, that middle level of service. What you're going to do is go to my link tree. You're going to go down below to any of the Trendspider links that I include in any of my episodes. It includes, I think it's Gary93 or something at the end of the URL. If you want to just get it, go to linktr.ee/daily stock pick. Right here, 50% off. You get my algos, watch list scanners. You get everything. I will be driving this week, so not only will it be a short July 4th week, but I will not be doing my podcast. I will be doing my newsletter. So the dailystockpick.substack.com, that's the link right there. You can go there, you can sign up, or you can go to the down here, Daily Stock Picks newsletter, Substack, right down there. You can go there. If you are trading with Robinhood, I would suggest Webull over Robinhood. Sign up for Webull, fund an account with as much money as you want. There's no minimum. Get up to 12 stocks for free. It's the third link right here. Other link. If you are paying anything more than $20 for your phone service, $25. This is a link that will absolutely get you $20 off your first month, making your first month $5. It is so simple. You bring your own phone. You don't need a phone. Basically, you go to that link in my link tree, which is the second link. You go over here to Visible. You basically say, bring my phone. You don't need a new phone, or you can get a new phone. I signed up one person the other day, a friend, who was paying $75 to $80 to Verizon with an older phone. That was just the service. We got Visible, and we got a new iPhone 13. iPhone 13, not the 14. We got a new iPhone 13. And it was less than the $70 per month for that. So she's saving money, plus she got a new phone. So that was just, a few weeks ago or so. But again, the link tree, it's the second link down there. The Webull's the third link. Support this page. If you want to tip, if you made some money off of a trade that I gave you, hey, Venmo, PayPal, or Cash App. I prefer Venmo. It's just easier. I would say Cash App is the second. PayPal is the third. PayPal charges me some fees for some reason. I don't know why. But Venmo, Cash App, PayPal. You can tip me. I don't care if it's $1. I don't care if it's $1. You can absolutely just give me $1. The reason that makes me feel good is because I know you made money. I don't care if you made $100,000 off your trade. Sure, I'd like a standard bartender or server tip of 20 grand. Sure, I'd love that. But give me $1. I know you made money. I'm cheap. I don't know that I didn't necessarily tip me more than $1, But if I gave you a tip and you're in there, or if you asked a question and you made that trade, yeah, I deserve it. Any questions, hit me up. I will not be on tomorrow because we don't have a market open tomorrow. I most likely won't be on Wednesday. If I am, it's a bonus, mofos. But if I am, I'm out there. And Michael, I will stay onto YouTube here at the 1 hour mark. And I'll give you my thoughts on Tesla. I already did it on the podcast. I think it's an opportunity, but we'll talk about it. Okay. Happy 4th, everybody. Please don't light off fireworks late at night. Be respectful for those veterans with PTSD and dogs who have PTSD like mine from being rescues. So be considerate. Don't be douchey. And fireworks, there's a lot of kids out there who need headphones and say, come on, be nice. Fireworks are great. Don't do it in a city setting. If your neighbors have kids or pets, don't do it. Don't be a douche. So, and whatever. Okay. My rant is over. See you guys later. Bye.